All right, let's have a look at the aggressive entries. So again, the aggressive entries consist of all the formations that you have learned so far. Again, double tops, double bottoms, MSS, break and retest. And again, at the end, it all comes to simple market structure. It's all about identifying higher highs, higher lows, and lower highs. That's it. Nothing more, okay? But just the formations kind of help us visualize how the market is moving and really to ingrain those patterns in our minds, all right? So the difference between the conservative and aggressive entries is that this time we're going to be using either instant execution or limit orders. Remember with the conservative entries, we're using stop orders, but right now we're going to be using limit orders. So I really hope you are aware of the difference, and I'm going to provide you with more examples. And actually I can record a little video after this, or even I can put it before that to explain the difference between stop orders and limit orders so that you actually can eliminate all the potential confusion. So yes, I'm gonna do that, but let's have a look first at the aggressive entries, and it's actually gonna make perfect sense to you. So as the market breaks and closes above structure, your aim is to identify an entry area. So in order to take an aggressive entry, you need to have some sort of broken structure and need to have some sort of a level that you're looking to place your order. Okay, so this is important. Usually it is the last broken structure that is clear and it can provide a potential BRS formation. So if you remember what I said before on the conservative entries, sometimes you don't get that perfect break. Sometimes it's just one little candle, then one can stay just above, and then the next one is actually gonna start creating the higher low formation or the lower high respectively. But with this one, you need a clear, nice break and a potential BRS formation. Okay, and stop loss of course is always below the lowest point of the previous structure, because with this we don't use conservative, we don't use stop orders, but you always want to keep your stop loss as safe as possible, so always below the previous structure. Okay, and in order to place an aggressive entry, you have to be super confident that the structure is really broken strongly with strong momentum. If you see a weak break, like we had an example, let me just go back. Yeah, this is not really a strong break. It is a strong break because it's a beautiful body close, but it didn't come further from this level, because usually you would like to set a limit on this zone. So if it came around right there, definitely you can set it. Okay, so if your break is not really significant, it doesn't really pull away from that structure, then you should be using a conservative entry. So this is why I told you that you're constantly going to be switching through conservative and aggressive. All right. So again, a few details. Not always price will tag you in. Sometimes it will just run away without tagging in, just continue to push, and that is fine. Did you lose money? No, you didn't. Why do you care then? Don't go FOMO and don't try to chase the trade. That is when all emotions are gonna start kicking in, right? And of course, sometimes it will also quickly hit your stop loss. Should you take the trade again? Not at all, because you just had a stop loss. You were wrong, and I am wrong a lot of the times. I'm actually having a 45 to 50% win rates, and that is perfectly fine. You are gonna have losses, okay? So that's the disadvantage of the aggressive entries, is that you are gonna have less confirmation than the conservative entry. You're gonna set a limit and forget, okay? And you don't know if that is actually gonna work out or not, but this is part of trading. We never know what's gonna happen. The advantage though is that this approach is more set and forget. It will most of the times provide you with a tighter stop loss, which will on the other hand result in a bigger R&R. So if everything of that is clear, make sure to again digest it. Let's have a look at some examples. I have prepared a lot for you right there. First example, let me use my favorite blackboard right there. A blackboard, whiteboard, bro. What are you talking about? All right, so right there, what do we have? Again, let's analyze structure. Lower high formation, little bit of a double bottom. Do we actually broke this major structure? No. Lower low, lower high, lower low right there. And what do we have right there is this break. This beautiful push to the upside that broke structure. So again, some of you might say right now, we had that break and the market already retested. That is fine. You can take an entry from here. That is fine. But have a look at the pattern. Have a look how the market pulls away, stays above, comes back for a retest, and then goes. And actually during my weekly outlook and setups, I'm always telling you this. If you have spotted so far a break, I want to see a clear break, a stay above, kind of for the market to really round up a little bit, not just a break and a retest like this, but for the market to really confirm that it's holding something like this, and then to potentially retest. Actually have a look, the retest is right there with this wick, and then to potentially go. Okay, so this is an aggressive entry. Why is it an aggressive? Because we don't wait for any candle confirmations right there. Okay, could you have done candle confirmation? Absolutely. Bullish engulfing candle right there, beautiful rejection candle right there for a potential stop order above. So you could have been triggered with this candle right there, and maybe you could have kept your stop loss right there, which could have actually, this example, reduced the stop loss. But again, it's all about what you like. We had the market shift, we had a new higher high, this structure was broken, this structure was broken, and even this structure was broken right there. Retest of the most recent structure, that is right there. This is our major lower high, so because this is our lower low. Then the market stays below, but then it breaks. And then we retest, and then we go. So really hope that is clear. This is our first and pretty simple example. Let's have a look at that one. Let me again use my whiteboard. Okay. So what do we have right there? So the market is in a downtrend. Then this is actually our little pullback right there. The market starts to consolidate, tries to push up, fails, tries to push up, fails, tries to push up, fails. And actually what is this? It's kind of a triple top or a double top. We have that little pullback right there that I always speak about. It's going to happen. And then we have that nice pull away. So have a look at that. It is a nice pull away. It is a nice break of structure, and then we round at the bottom. We create the lower low, and we perfectly have broken below the structure. And what happens later? Where is your most recent structure? It's right there, this one. And where is your most recent lower high? It's actually this one. But again, if you want to be safe, you can just place it above this high, right? We got triggered in, suffer a little bit of a drawdown, push down, pull back, lower high, take profit. Simple, okay? That's our second example, and I think this is pretty straightforward. We have the break, we have the retest, stop loss above structure, and then we have it. Could you have entered with a conservative entry? Absolutely. Rejection there, rejection here, bearish engulf. Enter right there, stop loss again above the structure, and right there we have that evening star formation, but the market went a little bit too far away, so this is actually entry right there. All those rejection candles and possibly this bearish engulfing candle. Okay, and you can of course experiment. You can figure out your own approach, combining both entries. Okay, next example, let's have a look like this. Oh, goodbye. Okay, so yeah, that is a nice example because I was doing a little bit of a backtesting session in order to provide you with those entries, and I was looking to take a trade from here. So have a look. The market pulls back, lower high. This is our major lower high right now. The market breaks below. This turns this into our major lower high. Then the market creates this lower high, fails to break below, and creates a double bottom. This is not a break. This is not a break. This is the break. Okay, so keep in mind where the break is. This candle, this big bullish candle. Then what the market does, oops, come on, erase all. Okay, what the market does is it stays above, it prints this candle as well, and we have our order right now. We have our order in this area. We have our buy limit right there. But the market just continues. And you can see goodbye. It will happen. Do you have to enter right there on this bullish engulfing candle? Absolutely not. You're gonna have trades like this. You're gonna have some missed trades. You're gonna have some not triggers. Sometimes even if you set an order right there, the market could come right here and explode and just miss you by 1 pip. Or I've had numerous times that I missed by just 0.5, so 5 pipettes, half of a pip, okay? And you are gonna have that. So be patient and just go on to the next trade. So that was a great example again, how you could have entered, but how you actually didn't get an entry. Next one, let's have a look. Try to screenshot. Come on, I'm not pressing the right buttons. Okay, here we go. Boom, boom, boom. All right, so what do we have right there? We have a big downtrend, not really a clear structure again, but again, let's monitor the most recent one. This is a lower high. Why is this a lower high? Because the market strongly broke below and created a lower low. I have indicated that it's a lower low as well. The market pulls back for an equal lower high right there to potentially try to push down, but it fails. And what it does, breaks above, stays above, stays above, stays above, and it forms that little roundup right there that I spoke about previously, right? So what do we have to do? Where is our structure? Right there, this is our broken structure. What do? We set a limit right there, tag into the limit to perfection. Stop loss, where is the stop loss right there? I placed it below this structure because this kind of made sense to me to be a higher low. I didn't want to place it that low because this was way too big, so I placed it below here, and if actually the market broke that structure, then potentially we're actually turning bearish and you can potentially switch your bias. But again, as you can see, this was a perfect tap and then go. And keep in mind that this is potentially a 4 hourly higher low, Okay, the hourly time frame has already provided you with a rejection candle. So for example, this right here, this again, we come back to reading the 50-minute candlestick and to make them into an hourly candle. Let's take this, and this candle. What is this? The market opens, creates a big push to the downside, but then rejects all the way up. So this right there on the hourly time frame is a pin bar. It's something like this. Then 1, 2, 3, 4. Then actually the market creates another bullish candle after the pin bar. So you have something like this on the hourly. So you have a pin bar and a little engulfing candle. And then you have that pullback, which actually the market creates a pullback to create that wick, and then potentially we start to skyrocket to the upside. Okay, so really hope that makes sense, and you can see how everything is starting to build up so far. Let's have a look at another example right there. That is again super simple. You're gonna see a lot of those patterns. This is again a simple double bottom. We had a downtrend again. The market reacts from that level, pulls back, tries to break lower, but fails. But this is our main structure right there. And again, you can see we break above, but this is a little bit tricky. Okay, so you can set a limit right there. It's perfectly fine. But you can of course enter conservatively. Why? Because you have 1 rejection, 2 rejection candles. Really nice. And you can place your buy stop right there. So imagine that this price action is not existent right there. So you just, oh man, this is way too messy. So you just have those 2 pin bars. So you can set your order just right here above them. And once the market triggers you with momentum, your stop loss actually could have been below here. Or maybe even to take that wick right there. Okay, but on this occasion, we enter with a limit. After the break, the market retested, or with an instant execution, we enter right there. And the stop loss was of course below the structure. But as you can see, then we started to skyrocket to the upside. So this is another perfect example of a double bottom break and retest and continuation on our entry time frame. And one final example. Let me screenshot it again. Let's have a look. Yeah, this is actually perfect. This is a really nice strong momentum break. Okay, so what do we have? We have an overall downtrend right there as well. The market creates lower high, lower high, lower high, lower high. But what is happening from the bottom? So this is a lower low. The market fails to break that lower low, fails to break it again, and fails to break it again. So we start seeing that there are a lot of buyers coming in from that level. And what happens when there are a lot of buyers? A big push to the upside that breaks all the structure on the left. So this is what we want to see. This is really nice. Then what we have to do is we have to find a place for an entry. Where is our place? Well, the most recent break of structure, which is right there. Set our order right here. Stop loss should always go below the lowest structure, which is right there. And here we go for a nice continuation to the upside. Okay, could you have entered with a conservative entry? Well, possibly yes. You have a strong bearish engulfing candle right there. You have a nice rejection bullishness. It's not really an engulfing candle, but what you could do is you can set a buy stop probably somewhere around there after this candle formed, and you could have been triggered in, and maybe you could have actually reduced your stop loss by a bit, maybe right there, and then you will still have a winning trade. Okay, so this is another great example of the market clearly pulling away with a strong momentum, so that it makes actually sense to set a limit on the broken structure. Okay, and this is actually our final example. This is how we're going to wrap up the entries. Right now I'm actually gonna put together a video for sell limits, buy limits, sell stops, and buy stops, so that I am sure that you are aware of how to use them. And then we're gonna put everything together, and I'm gonna provide you with a few more insights. All right, so I really hope you actually enjoyed those entries, and you're gonna go to your charts and study them, and I'm of course gonna show you how to backtest a little bit and how to spot those patterns.